We're just a short while away from the presentation of the union budget, and we don't at this point know whether the finance minister is going to announce any SOPs for individual taxpayers like yourself and indeed me. I hope she does. But in the meanwhile, I thought let's do a refresher of where things stand right now. There is the old tax regime and the new tax regime to contend with. I wanted to give you a bit of a refresher as to what each of these entails and which choice is best for you. It gives me pleasure to introduce my next guest, Arvind Rao, who is a chartered accountant, certified financial planner, and the founder of Arvind Rao Associates. Thank you so much, Arvind, as always, for taking the time. Let's start with the basic difference between the two. The new regime and the old regime. It's been now 1 year since the introduction of the new regime, right? So how would you classify the two? What are the major differences that you would highlight?
Yes, Alex. So not only it's been a year now, I think we can easily say that the new regime is one tax filing season old now, because in the recently concluded due date as on December, it's been one full round where the new regime was available for employees to declare, to announce their call to the employers, and later also take a call while they file their returns. So this was introduced in the budget 2020, which was to be made applicable for the assessment year 21-22 onwards. And what happened here basically is that taxpayers were given a choice to either continue getting taxed in the same way that they were till that date, which is also called as the old regime, or alternatively, there was also a new regime introduced. Now, going back to basics, as you mentioned, I think most people were aware of the 4 slabs that were possible, which was 0 to 2.5 lakh is zero tax. 2.5 to 5 lakhs was 5%, 5 to 10 used to be 20%, and any income above 10 lakhs was taxed at 30%. Under the new regime, what happened was that the slabs were elongated a bit, and instead of 4, now there were 7 slabs that were introduced, wherein the first 2 slabs remain the same, and subsequent to that, 5 to 7.5 lakhs was at 10%, 7.5 to 10 was at 15, 10 to 12.5 lakhs was 20%, 12.5 to 15 became 25, and income above 15 lakh became 30%, or rather was to be charged to tax at 30%. So one can see the shift that instead of 10 lakhs, which was the threshold for income beyond which was to be taxed at 30%, here came the new regime which said that instead of 10, this upper limit is now raised to 15 lakhs. Having said this, it wasn't as simple as this, because the new regime came with a big disclaimer that a lot of exemptions and deductions were not to be allowed under the new regime. If I were to give a number to it, there were approximately 70 exemptions and deductions that were not allowed. And these included the more commonly known ones like the house rent allowance, the leave travel allowance, and in addition to this, the most favorite deduction claimed by taxpayer, which is the interest that they pay on their home loan, as well as the most commonly used deductions like the 1.5 lakh under ATC or the 25,000 per annum for the Mediclaim premiums under ATD. All of this was removed, and the taxpayer could avail the lower tax and the higher tax brackets under the new regime and see which works better for them.
Okay. I want to get into a few of these illustrations, because there are a lot of misconceptions, I think, in terms of what is better, particularly because a lot of people feel uncomfortable with the idea of doing away of deductions completely. They've gotten so used to the old system of having so many deductions that they can't believe that the new regime is actually superior and results in lesser tax. But before that, I want to understand this other misconception I think that people have is that once you have chosen the new regime, you can't go back to the old regime. Is that the case? Or is it that starting from the new financial year, you can again make the choice to go back to the old regime if you have indeed had the new regime in the financial year ending March?
Yes, there has been some noise around it. So let me simplify. The rule as it stands is that for although it is commonly referred to as salary taxpayers, let me refine the terminology here. It is basically non-business tax filers and business tax filers. So for all the people, which includes salaried people, senior citizens having only maybe rental and interest income, or any other taxpayer having income other than business, they have a choice to switch between new and old every year at the point of filing. There is nothing which prohibits them to or rather stops them from moving. So if in 1 year, for example, the last return that was filed, if they have gone for the new regime, that doesn't mean that for the upcoming year when they are filing, they have to follow that. They can still go with the old regime there. However, for business cases, the scene is slightly different. What they have been told is that they have a once opportunity. That is, if for assessment year 21-22, if they had opted for the new regime, they have only one more chance available, where if they want to come back to the old regime, and if they decide to come back to old regime, they have to stick to it. They cannot again go back to the new regime. So for the recently concluded tax filing season, this decision whether to go for new regime or not was, you can say, slightly more critical for those taxpayers having business income, because there is only one time window where they can switch, that is opt for new, then come back to old, or stay in old and then go back to new, whichever the case may be. However, for non-business cases, life is simple, because every year they can keep juggling between these depending upon whatever is more favorable for them.
Let's talk about what makes each of them favorable, because you mentioned that in quite a few situations the new regime might indeed be better, particularly because it makes life much simpler. You don't have to find proof of investments, for example, just as one example. But let's talk about the situations where the old regime is better, Arvind. One clear instance of that would be if you are living on rent, or indeed if you've just bought a house, because there is a sizable deduction available for interest that you're paying towards a home loan, right?
That's right. So let me put it this way: that on the in terms of age, on the lower end of the spectrum, where you have newer joinees to the workforce. Let's define the age bracket as anywhere between 22 to 27, where these new earners are looking to basically keep aside money for acquiring assets, whether it's a car, whether it's a home, and with any kind of investment that you do for tax saving, a minimum of 3-year lock-in and upwards becomes applicable. So lock-in could be as high as 5 years, or sometimes even 15 years, as we know the PPF is. So for these people who are looking to not part away their money for a longer lock-in, and who have not yet acquired assets and hence the borrowings that come with it, the new regime is more favorable, because there are no deductions that they are anyways trying to claim. So in that case, the higher slab thresholds helps them to lower their liability. On the other end, on the higher end of the age, especially for senior citizens, normally not a lot of them want to again lock away their money into locked-in instruments just for the purpose of tax saving. So we more often than not see pensioners, or even non-pensioners, but people living off interest from their investments, that they typically shy away from making investments for the sake of tax saving. Now, even in this case, we have seen during the last season that the new regime has helped, because when we were to do a comparison between the tax that they would have paid under the old regime versus tax that comes payable under the new regime, case to case, we have seen a difference of anywhere from 15,000 to 20,000 in terms of lower taxes under the new regime. So these two cases I definitely see as a great, what do you say, a great place where the new regime fits perfectly. In addition to this, in few cases, for people earning income above 15 lakhs as well, we have seen that where the deductions, specifically if they don't have a home loan deduction, because that's a 2 lakh, or even where they are not claiming HRA, which the deduction of which could be in few lakhs. If these two commonly availed deductions are not there, then even in those cases, the new regimes have turned out to be more favorable for such people. So, Alex, I think, like most people would have done, that it is essentially the best way to choose between new and old is that you calculate a liability under the new regime, you calculate a liability under the old regime. Whichever throws you the lower tax figure, you opt for it. That's at least something that we have been doing at the point of filing for people who have not already planned which regime to go into.
Okay. Having said that, you specifically mentioned that above 15 lakhs, Arvind, it makes sense to go for the new regime because I would think that simply mathematically it doesn't make sense to opt for the old regime. Is it really that simple though?
So there is no straight answer to this. Like, in fact, let me add one more thing. Like a typical observation that we had in the last, in the recently concluded season is people above 15, and in some cases we saw that where the income is up to 40 or 42 lakhs. So basically, in this zone, 15 lakhs to 42 lakhs is where we saw the new regime giving better results. But people above the 42 lakh threshold, wherever we had these cases, we saw that the old regime was still working out better, even where they did not have the home loan deduction or the HRA deduction. So there is really no one answer that will fit perfectly in these cases. The best way is calculate, compare, and then take your call.
I have another question on the investments, and you briefly alluded to this, Arvind, when you spoke about the lock-in period. Now, I think, for example, equity-linked investment schemes, so ELSS, basically, savings schemes, have a lock-in period for 3 years, and it's quite popular. And usually, I think that you've seen a spurt in the buying of these schemes when it comes to the deadline day, right? What happens to these? So assume that somebody is moving from the old regime to the new regime and has, for example, an SIP running. And I know that there are advisors that advise against an SIP also because of the nature of it, because of the lock-in that you have. But if they're used to something like this, would you suggest that they switch out from these investments because it doesn't make sense anymore?
Well, they may not be able to switch out from these investments because of the lock-in that each of these SIP installments will entail. But for people who have already taken a call that they're going to move to the new regime, what they could do is they could stop further SIPs into these schemes and probably move that to more open-ended schemes to, if they want to have equity participation in their portfolio. Because ELSS, obviously, because of the lock-in, will prevent them from doing any kind of switches or transactions in case they need to do in the next 1 to 2 years. But as regards existing investments that they have already made, the only option left with them would be to continue till they reach the period when the tax lock-in opens up, after which they can take a call based on the market levels at that point in time.
Absolutely, that's exactly what I meant. After the lock-in period, they should switch out. But I think it's been a great refresher, Arvind, and certainly I think a lot of our viewers will be more confident heading into the presentation of the union budget. They'll know what to look forward to. And as always, a pleasure speaking with you.
It's been my pleasure too, Alex. See you.